Hello guys, and welcome back to another video of phase 2. And in this video it's basically going to draw everything that we've learned so far together. But when it comes to the market and when you actually are trading and after you finish the course, you'll realize that some of the decisions that you'll need to make, especially when you're using, for example, the inception entry or any lower time frame entry, you'll realize that you need to be able to make decisions pretty quickly. However, along with that, you need to be aware of what's happening across time frames. But the problem is sometimes it's very hard to be aware of what is happening in every single time frame because there's no way that you'll be aware of that and still be able to execute in time. But there are small little tips that we can see in order to the small little tips that we can see on each time frame to understand what is going on um, in price. Okay, and it helps us improve our POI selection, and it helps our trading as a whole. Now, bear in mind, in this video, we'll sort of be speaking about entering trades, but it will only make sense once you complete phase 3 and once you've learned all our entry criteria, because this is basically another idea of how you can improve it and how you can improve your own trading, and essentially it can be used as a confluence in a way, because it's another way to sort of read price. Okay, so from this phase you should be aware of what an OB actually is. But the thing is, sometimes obviously all we need is the last bearish candle that goes on to break structure. It's a very basic way and it's a very simple way to identify your POIs. However, there's other ways we can understand how price is moving, because sometimes I'm pretty sure you would have been aware is when you see price do this and then suddenly you see it react from somewhere in the middle of nowhere. Okay, and you're probably thinking, why has it done that? But the thing is, say for example this is the 4 hour time frame. This is probably reacting to an OB on say like the hourly time frame or the 15-minute time frame. So this is what I'm talking about in terms of your not higher time frame, in terms of your time frame awareness. However, it's not always easy to understand um, what is going on inside, like inside this range. It's not possible to be aware of what's happening on the hourly time frame, 2 hour time frame, 3 hour time frame in one go. Sometimes you don't have the time to be able to do that. So we need to understand how price is actually moving. Okay, so before we do that, we need to understand what's actually happening inside an OB. So remember when I was speaking about in the liquidity video, when price moves in a sort of like a range channel, then it goes on to grab liquidity, and then we go on to create the impulsive move, and then we are trading that mitigation to continue, and then we're going to carry on following order flow. That is essentially the basic to the strategy. Now, the thing with hold on, let me get rid of all of this. Get rid of all of. Oops. You know what? We'll just do that. But so that's just a basic way to see it. But when you come to the charts, you probably won't be able to identify that, because there's so many different ways to identify ranges. And of course, we can just look at a time frame. For example, this is the 4 hour, and for example, we can see range, 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 and generally that's a minor structure OB. This is our actual OB that we would have used. This would have been our successful retrace OB, which we potentially could have entered from. Obviously, probably lost on that one. Is there any more I can spot? For example, here we've got another one where we've got that impulsive break of structure. It's got a potential liquidity grab, but we potentially could have got an entry from here. I actually remember calling this trade actually to one of these lows. Same thing here, we've got somewhat of a range, price goes and reacts and carries on, and then we've got order flow here, but now we've got bullish order flow. Now that obviously probably sounded very confusing, but this is what I want to show you in order to be able to understand what's going on different time frames, because just from looking at this time frame you can gather so much information and understand what's happening on the lower time frames. And the reason why we understand what's happening on the lower time frames is we bring it back to the whole idea of the fractal nature of the market. We need to be able to read price and understand it. It's all well and good being able to understand and follow the rules, but we still need to have some logic behind it and some sort of understanding. Now, this is not something that I'm saying, it might take away the discretion a little bit for some of you guys. However, it's not something that I actively think about when I'm actually trading, because I still follow the rules. However, this is just a confluence in order to improve it, because everything we do has to be rule based in order to find consistency. Because when you follow rules consistently for an edge, it leads to your own profitability, because having that rule based system will allow you to take away somewhat take away the emotions that come with trading, right? But we'll speak about emotions and psychology in another phase. But anyway, let's break this down, for example, right? Let's go for the hourly. Okay, we got an example right here. Okay, now I haven't, before with this video, I haven't actually read price, so I don't really know what's actually going on. But this is what I mean in terms of where we have this breaker structure here. Okay, so we have this low, our high is here. Okay, so we have bullish intent. Okay, now bear in mind we are just focusing on this area here. Now what we can see is price has reacted to this. Now how do we know that this is a lower time frame range? How do we know that? Because when you get a candle, okay, when you get a candle like this and the next candle is within it, including when the next candle body is within this, the previous candle, forget about the wicks for now, we know that price is trading within a range, because this is essentially for example, that's that previous candle, and then price is basically moving in a range, and then we have that impulsive move and we have pricing inefficiency. So what does this tell us is that this is where the institutions are collecting their orders, and we know that there's sell orders here, for example, to make this an OB, and then it goes on to break structure. However, in terms of our POI selection rules and in terms of our OB selection rules, pretty much the same thing, this wouldn't meet our criteria purely because of the fact we have this low and we have our OB here. So a lot of us will be waiting for this, and to be fair, even I probably would be. I most likely would be, because sometimes I wouldn't even follow that. I like to have as much confluence as possible. For me, just by looking at this directly, I wouldn't say that's enough. But when we talk about entry criteria, if I see an entry criteria that is met and following our rules, I probably would have entered. But what this tells us is that there's a lower time frame range going on inside that candle, so potentially we could find an OB there. Now, in terms of following the rules and understanding how we're going to trade, essentially you need to try and build a reason, or I like to call it an excuse, to which way you want to go by following the rules. So say if you want to look for a trade, for example, we want to find an excuse to go either long or short. So for me, what we can see is obviously we have, say if we didn't see this price here, and obviously know the outcome is going to go long, but we don't know if we're going to get an entry or not, and we don't know if there's a POI within here, right? Just by looking at this hourly time frame. When you have this hourly whole impulsive move, I know that we have this breaker structure. So even though we just have intent, it's not confirmed. It's not a confirmed move. And again, when we talk about entries in the next phase, it will make sense. But even though this is only intent, I want to see if there's a reason to look for a long. Okay, so essentially I want an excuse to buy from here, because there's no reason for me to sell at the moment, because I don't have any sort of structure. We're within this range now, within this trading range. Okay, don't get confused between trading range and your sideways range. It's very, very different. Your trading range essentially is the ranges of your between your highs and lows, and your sideways range essentially is what it is price is moving sideways, and that's the whole moving between support and resistance, or whatever you want to call it, that liquidity grab and then that impulsive move. Then we trade the mitigation. Okay, let's get rid of that. So now that we've said that, let's have a look into this candle and see what's going on there. So let me highlight this candle. There we go. So let's go 15-minute time frame, for example. Okay, so there we go. So what we can see here, And as I said, I didn't see price before I did this video, so it'd be good for you guys to see how, you know, I see it, and hopefully you guys can build upon from this video. So what we can see here now is me trying to make an excuse. As I said, we saw that impulsive move and we want to see where price can react from, right? So what we can see is this impulsive move which goes on to break, and what we have is our structural low here and our structural high is just here, broken structure. Now in terms of our highs and lows, that's our high, and we have our low here because this candle was broken, so we have our low. Not only this, we have a range forming, okay? We have a range, and as you can see, we have this candle body in between, which means that inside this candle, then we have a range and an impulsive move. Prices come back to mitigate that, and then it continues going long. So that's just the basic idea, that fact that we can see that just from looking at the hourly time frame. So just by doing that, we're able to understand what's going on inside this. Okay, so that's a quick little tip in understanding your POI selection without going too low in time frames. And the thing is, the time frames is literally just a vessel for seeing price. Okay, we need to understand that you need to understand that you can't be fixated on time frames. You need to be aware of what is going on across the board, right? So, and I mean, we can do this. You can do this all across. For example, I don't know. Yeah, let's just see this point here. So, because I can see an impulsive move already. So, for example, in terms of, and as I said, you can do this on any time frame. So let's stick to the 15-minute time frame, for example. Now, all I can see here is, for example, I can see some sort of impulsive move, but our 15-minute structure is all the way here. But for example, I can see this intent. I can see this impulsive move. I want to see if there's an excuse to go long. All right, so that's the thinking behind it. Now, when I probably should have gone back a little bit further. There we go. However, because it doesn't meet our structure rules, I won't be looking to trade on the 15-minute time frame. However, I know that there is something going on a lower time frame, which will potentially give me a reason to look for a trade. So let's go to the 5-minute time frame, for example. Okay, so this is good. So what we can see here now is we have this range. Okay, we have a liquidity grab from the previous low. Well, the previous low is this one, sorry. We have a liquidity grab impulsive move. This is a valid OB to look for a trade to go long. And in terms of targets, as I said, we'll speak about that in another phase. But that's just a generic idea that we were able to see this long idea, okay, just purely because of this impulsive move. So say, for example, you're looking at price and you see this, okay, you see this, and this is what I mean in terms of making decisions. You probably won't have enough time to keep flicking through the time frames to have a look. As long as you can identify that this is a sideways range, okay, we know that there's some sort of institutional play that's going on here. We can see this huge wick before this impulsive move. We know there's a lower time frame play going on here, and what we can see here is we have our range, liquidity grab, breaker structure. Okay, and of course this is only 5-minute intent, but again, this will be entry criteria. This will be entry number 1. Should we use it, and then we can decide how we want to enter that, which we'll speak about in phase 3. But as I said, this was purely from looking at the 15-minute time frame. Okay, and it's the same thing. The thing is, you need to be aware of what is going on. You need to be aware of what's going on in price, because as we can see, this is going. Let's see how price goes. Sorry, I'm moving a bit quick. Okay, what we can see here, another impulsive move. So say this was live, we have another impulsive move, and we can see this sideways movement. Okay, so we have somewhat of a range going on here. Okay, however, this does meet our structure rules, because we do in theory have a low that has broken a previous high, so that is now effectively an OB. Okay, now when you have a range, that also indicates that there's a lot of trading volume within that. within the range, right? So that it gives us an idea that this is a valid POI. Now, if we go for the 5-minute time frame, what we can see as well is sideways movement as expected. I didn't know it was like this, but we've got sideways movement, breaker structure, and it meets our criteria, and we can use this as our refinement. So I'm expecting price to have some sort of reaction from this OB. Okay, so let's watch the 15-minute time frame and see where price reacts. There we go. Okay, so this is quite interesting. Hold on, I'll explain this now. So what we can see here is, and this is what I mean in terms of understanding candles. What we can see is this candle here, which created the high, but then the next candle, this next candle didn't really do much in terms of breaking the candle high or low, and then we have somewhat of a move down, fairly impulsive in terms of 2 candles down, and this was 1, 2, 3, 4, 5 candles up, right? This sort of shows that there was an impulsive move down, and there seems to be some sort of mitigation on a lower time frame. Again, this is understanding and reading price from a high time frame perspective to understand what's going on in a lower time frame perspective. So let's go to, before I do that, let me get rid of all my drawings here. Let me get rid of all of that, and instead I'll just draw a box around where we're expecting price to react anywhere in there. So what we can see is we want to know what's happening in there. So let's go 5-minute. Again, it's pretty much the same thing. We have a range, impulsive move, but we don't really meet our rules in order to understand our structure. Let's go 4-minute. And what we can see here is we have a high, we have our low, we have our break, and we have mitigation. Now, in terms of order flow is being created here. So now what this means is this is another point of interest, which also ties into the fact that our 5-minute nature, we have this whole impulsive move, and this can also be seen as liquidity and so on. But just from reading from this 15-minute structure, we can understand what is going on here. So although we're expecting to go long from here, we could potentially have a short potential from here. And again, this was fully read from the 15-minute time frame, and we zoned down to the 5-minute or 4-minute, whatever it was, just purely because we can read where price is, we can read what price is doing. And this is how you understand your OBs, because your higher time frame OBs is essentially a lower time frame range. That's probably the easiest way to sort of understand. And the reason why it's a range is because it is where orders are being collected, and until it's ready, it's going to grab liquidity, and then you got the impulsive move. And then we're waiting for that mitigation play to happen, right? So let's let this play out. Hold on, let me go slower. So okay, so we're into the POI. I don't know who I won't talk about entries now, so I don't know if we would have got an entry there. Let's carry on. You know what? I'll play it out. Okay, so now we're here. So the idea is, will it break or will it not? But of course, this is a valid place to sell. So when you look about when you think about your biases, obviously you're going to follow your higher time frame bias, but depending on the time frames that you're following, say this is obviously a 15-minute time frame, so it's intraday. So say for example, we're looking to obviously buy here, but it's a very short range. This is of course a higher time frame range here, so this could potentially have to retrace back here before continuing. I don't know that because I haven't really analyzed the higher time frame in this perspective for this video. I'm purely trying to understand, explain to you how we can read price but in a more efficient way, basically. Let's go here. So again, let's see how price reacts, and again it's come further down. It's reacted perfectly off that, and let's just watch how price goes. And there, it's gone on and taken the lows, grabbed that liquidity. Again, what we can see is formed somewhat of a range, and essentially that's how price moves. It's come into the range, it's tapped it, and it goes up again, then it comes back down, because what we see is another range here. It's reacted off there and it's coming down, and that's essentially how price is moving. And I'm doing this all just from the 15-minute time frame, for example. But when we look at, say for example, when we look at this on the 5-minute, because again we're going to be looking for an excuse, what we can see, it does meet our structural rules. We got our low, high, we got our break, and we got our liquidity wick, and it just reacts to the base of that liquidity wick. And what I want from you guys is, this is probably the hardest part to grasp. But once you finish the course, come back to this video and try and incorporate everything together. Now, this will not be easy to pick up in terms of reading price, and it does take a lot of chart time to get there. But don't worry, you will get there. It will just take some time, and it's completely okay and completely normal to spend some time, and it's completely normal for it to take a while to get there. But in order to understand and get to that level of experience, you need to get the chart time in, basically. But this video is just a quick way. It's just a how can I say it? It should be a reference point for you to understand how you can make decisions a little bit quicker, and how you can be a bit more aware of what's happening. And bear in mind, all that happened in this range, right? And what we can see in another impulsive move, obviously this is minor structure, but you can see where price reacts. So all this is happening in there, okay? Formed a range, break a structure, comes back and reacts there, okay? That's essentially all it is. And we'll probably find another range within there, because that's essentially a minor structure OB. And obviously price is reacting off it. Obviously it's easy for me to say now because I've seen price, but obviously what you saw here, I didn't read price. I didn't have a clue what was going on, and even just from glancing at it, I would not know where the long, where the shorts actually were, okay? But this will come, and you'll be able to do that in due course, okay? Another thing, as you can see here, you've got a range, okay? Price reacts, comes back to the next range, and that's essentially how price moves in waves. Because all this is, in terms of supply and demand and how markets actually function, we have a range, okay, which is generally called a base. Like, that's a very bad writing, but essentially it's base. We have a rally, which is our impulsive move. Then we have another base, rally, base, rally, base, rally. That's the whole idea of supply and demand, of how price is moving. And this is a constant cycle of price. Okay, and that's essentially what we are doing in terms of our trading. Now, when you come to follow our entry criteria rules, this is something to have in the back of your mind in order to identify your POIs a little bit more efficiently and with higher probability. And obviously you'll learn from, I think in phase 4 will be where you'll learn how to improve your probabilities on top of that. So I hope you've enjoyed this video, and as I said, once you complete the course, come back to this video and then try and put it into practice.